part of the webinar is me answering your questions. So please prepare the instrument and time frame of your choice, and I look forward answering it for you, analyzing it with Fibonacci levels, showing you if priced at the trend inception, at the trend exhaustion, where the price will be reversing, and that's to me always the most exciting part of the webinar. And please always remember to review US government required disclaimers to recognize the risks involved in trading. So let's start, shall we? What makes alpha wave trader method different? I don't use any software, I don't use any indicators whatsoever. Every time when you come to the trading room, this is all you will ever see on the charts. This is all that matters to me. To me, this is the alphabet of the market. And it doesn't matter to me if I look on minute charts. It doesn't matter to me if I look on range charts. It is all the same formula. The price moves in exact same identical sequence. Doesn't matter 8 range, doesn't matter hourly, doesn't matter monthly. The same identical beautiful formula that the price is based on. And that's all we trade in our trading room, and that's all we teach in our education course. Pure price action for entry and Fibonacci for exits. So why do we do this? Most indicators, most is a keyword, look at the markets after the fact. If you found the indicator that works, stick with it. It's extremely important. It is an exception, it is not the rule. Because every single indicator works by mathematical formula that applied to certain sequence. And therefore, most indicators show the price move after the fact. So when you backtest, when you look on the charts, in the historical structure, it looks marvelous. But when you come to live markets, it's entirely different story. For example, this is S&P hourly. This is where we had taken long on S&P hourly in our trading room. This is where we had taken long twice, and this is where price had found incredible resistance because it was the end of the minor trend. And this is where I closed trading room with a trail at 1932 yesterday. And I will show you the exact reason why we had taken long from that level. Because this was extremely important Fibonacci level. But the most important sequence is what has happened today at OFMC. And where is the price taken a major pause? If you used price and only Fibonacci with extremely important 4 rules that we teach in the course, you would know that this is reversal zone 3 as of Monday morning. Price tells you very far in advance where these levels will be. And that is absolutely essential and critical for profit taking. There is absolutely nothing random and speculative. Precision is the key to the tick. Decision point 1. Decision point 2, where S&P collapsed from today, as we witnessed in trading room and completely ignored this continuous move. As our long reached this ultimate destination and completely collapsed. And that's the beauty of the price, confirming that nothing in this world is random. The same symmetry you see in everything that surrounds you, found in price. And on Monday S&P spelled out where reversal zone 3 will be. And I will show you multiple examples, and I look forward to answering your questions. So please, as soon as I'm done, so your questions are not overlapped, please post them. So this is typical example of how indicators work, as I always in the past worked with multiple software programmers, and that's typically how software is developed. And this is one of the very last indicators I used, which is moving averages crossover, which is amazing, awesome, and fantastic in trending markets. Because even if you acquire position pretty late, it's not an issue. On the chart it looks here, but by the time you enter, you are somewhere in the middle of the trend. Definitely not where the price shows crossover. And this is where it becomes an issue when market goes into correction, which is exactly what S&P had done yesterday after it came to this level. This is a danger, and this is where knowledge of the price is the key. This is what price does 40% of the time. Corrective move, when the most best thing you can ever do is walk away from computer. And that is extremely important, and that's what plays out in the market 30 to 40% of the time. Nevertheless, each level respected to the key, the end of the minor trend, the end decision point 2, and here we are, major pause after FOMC release. So, and that's a fact. So this is a chart of one of the students who came to me after 20 plus years of trading. And I said, Jim, so when I work in private mentoring, I typically log in into student's computer and I see what student had done before. And this was a chart, the last chart that he used. He couldn't even count how many indicators he had on the chart. And he shared with me that he was lucky enough that he was at break even after 20 years of trading, which is actually a pretty good exception considering the number of indicators on the chart. So typically if trader blocks the price, which is the most important ingredient that is hidden under multiple arrows, lines, and God knows what, trader is really not in charge of his trading, as indicators dictating what to do. And that's the bottom line. And what I learned in the markets through the last 2 years, that it's incredibly addicting and very difficult for traders to let go of indicators. And this is all we use in our trading room. Pure price for entry and Fibonacci for exits. And I will pull up a couple of examples from the past that you can also visit in our blog. This was a short trade we had taken yesterday in our room on oil. And this is where I closed the trade saying buckle up. And if you know what to do, take a reversal long. Trading room close, this is Pacific Standard Time, at 9:30 PST. And this is where rally on oil started, well before news release today. And this is, if you know the price structure, after the short, you had incredibly powerful long formation. But once again, it's oil 8 range, and this is Fibonacci level that identified reversal zone. Exact same identical formula, oil 8 range or S&P 1 hour. What speaks to you and your account size? Are you a swing trader? Are you trading ETFs? Or are you a day trader who trades oil? And that remains the key. Very important to identify what's appropriate for you and your account size. So, what is Fibonacci? Fibonacci is incredibly fascinating, very powerful symmetry that surrounds us in everything. And this is the formula that was discovered by Leonardo Pisano, which details a number sequence that impacts our everyday life. Here's an example of Fibonacci numbers. And this is what creates symmetry in absolutely everything. Even when you look in the mirror and even when you see human body. These are the numbers that create the exact same sequence in the price moves. And this is what's called golden ratio. If you add every single number, it will start creating formula that keeps expanding. And this is what trend does. Doesn't matter what instrument, doesn't matter what time frame. And that's how trend keeps expanding each and every time. This is oil in the month of February. All the levels drawn in 2013 month of September. Oil daily chart spelled out where reversal zone will be. That's where oil staged bearish correction, but pay attention to the dance between these levels. In the trading room, I demonstrate the method on oil and S&P. Our students trade multiple different instruments. Forex 15-minute, 1 hour, ETFs monthly, daily, weekly. Currently I'm working private mentoring with somebody on stocks weekly charts. It's all the same. Price is beautiful. Same formula. Confirming that nothing is random. We're just here to play by the rules. And if we do, if we obey Fibonacci levels, we know what not to enter into. As you could see very clearly, decision point 2 was respected. Price collapsed, giving you last point of re-entry at the end of the minor trend. Decision point 1 will forever remain the most important level in the market structure. Last chance to re-enter long, completely respecting and knowing what not to enter into. As reversal zone, major trend exhaustion. You never ever want to acquire a position at that level. That's all there is. It is not complicated. So here's a basic principle we teach in the course. This is how price moves in a magic formula of 5. This is how I see the price. And frankly, I get this question quite a lot, and probably about, I would say 30% of my students come from Elliott Wave background. I've never taken Elliott Wave course, I've never read a book, I never knew it existed. When I developed my method, I started searching the internet and I found that there was something similar. I see price drastically more simple, and I see it with very specific and precise rules. It's that simple. Major trend 5 waves, minor trend 3. No need to make it complicated. Trade wave 1, trade wave 3. Stay out of 2 and 4. Done. Those are the rules we're teaching and repeating on every single trade in our trading room and education course. And here's a classic structure. 5 waves, magic. If you cut the inception of the trend, you enjoyed very powerful rally. Last chance for re-entry was wave 3. And this is an example if you're acquiring position of wave 2 or wave 4. Bad idea. Do not be counter trend trader. And also remember, if you're acquiring position at the end of wave 3, you're acquiring position at the end of the trend. Here the trader got a little bit lucky and got a little bit more. But this is one of the essential rules that we teach. No trend entry here. This starts being gambling, not trading. Example, this is S&P. Today after FOMC. Yes, this is an exception. Because of very sharp volatility, one of the most powerful news in the market finally blasted through. But every time I will show you multiple examples. You do not want to acquire position here because sellers are waiting. And that is very important. You want to acquire position right here. 1926, 1928. Nowhere near in reversal zone. Way too late. And if you respect those rules, you respect and recognize the fact that that's how price moves. And multiple examples, multiple live trades and trade examples with commentaries posted on the blog. So you can go back a couple of years and review multiple trades. So here it is, an example of the ranging market. So let's talk about the market conditions and what we've been witnessing lately. Very, very powerful rally on S&P is coming to a stall. Volatility on S&P had been extremely low for day trading purposes. Based on my method, if you're a position trader, you had ability to buy S&P anywhere between 600 to 900 area. These are the levels I projected where S&P is heading next to. Bullish trend is well overextended, and this is where we're gonna start seeing serious selling pressure. Again, this is monthly charts. I will show you drastically smaller time frames, but pay attention to what happened at the end of the minor trend. Price gave us only a correction, but price respected this level highly. This is the most important level in the market structure, that if you pay attention to the price, you can identify if price will reverse at this level or will continue further up. This was very, very clearly a correction. Trend confirmed the correction and continues. But as you could see, for day trading purposes, it's been really, really, really slow. Markets are coming not far off to reversal zone, and I will show you where oil is in the same structure. So, trading markets respecting the waves, just like ranging markets. Fibonacci levels remain the same, but those very important rules identify where the reversal zone will be. So, for example, this was the gold 5-minute. This is where you had very beautiful long opportunity, and this is what I keep reminding our students. This was FOMC, gold 5 minutes. And this is what happens at reversal zone. Insane, spectacular move on gold. Gold collapsed back down and found buyers once again. And what did you see happen at decision point 1? All of these levels drawn yesterday morning. Another opportunity to re-enter. Bearish trend confirmed it was only a correction. And that's the magic of the price. And that's the dance price repeating consistently. Doesn't matter if it's Tesla weekly, Euro 2-minute, 4-hour, same formula. And that's all we trade, that's all we teach, that's all that matters. This is in a nutshell, again, wave 3, the most powerful wave in the market structure. Bad idea to acquire a position at the end of wave 3. Trading is very meditating if you play by the rules. I want to show you on the website. If you come to the home page or click on this orange icon, you can listen to audio testimonies from our graduates. One of the graduates from private mentoring, Rich, called me yesterday, said, Ala, I can't wait to come to the boot camp. I'll show you the boot camp info in a second. I said, Rich, how you been doing? Oil had been totally asleep. Volatility is 60% lower than historical volatility on oil. He says, I've been doing great. I just look on computer a couple of times a day. I take care of my mom. I ain't staring at the screen. I do exactly what you told me. And that's the power. And that's very, very important. If you play by the rules, you walk away from computer when markets are in correction. This was an example this morning on oil, 8-range chart. That confirmed by oil hourly. If you go to the blog or YouTube channel, you could see very clearly video in detail. So when we came to the markets this morning, I'm trying to find oil hourly chart so I can show you where oil was dancing, as it was truly fascinating what oil was creating this morning. So I will highlight it to you in just a second. Yes, it is being recorded. Jean had created the link already. I will forward it to you in just a second. But I would like to highlight to you the dance that oil was doing this morning. Thank you, Jean. Thank you so much. You can use this link and recap. So is there any oil traders? Let's take a look what oil was doing this morning. And again, if you come to the YouTube channel, on our homepage, you can pull up the video of the news trading today on oil. This is when we came to the markets. Oil was right here. What did we discuss? I said, it's prudent to walk away from the screen. It's prudent to leave the computer currently because bearish trend is respecting the end of the minor trend. And I highly encourage you not to trade these formations. And this is what oil was doing prior to the news. This is Pacific Standard Time. This was oil right here. Absolutely corrective dance. Oil, you saved yourself an hour of time and a lot of grief if you walked away from computer. This is the most dangerous structure that you can ever see in the markets. And the fact that price danced at decision point 1, the trend struggled for 5 hours and finally blasted through. Price confirmed. Bullish news did not matter. We did manage to take long trade that reached 2 targets and ended here. Price made it to 106.02 and then reversed later. Again, because of decision point 1. And this was our short on oil that we've taken in the room. And this is where it ended after trading room close. And again, you can view this on YouTube channel or the blog in detail as it was playing out in live markets. And frankly, it becomes easier and easier to trade, and it becomes more difficult and more difficult for the students to be in the trading room during corrections. So I will share with you what we're doing during the month of August, as we expect volatility to become even worse, unless, of course, events in Iraq and Russia will change the volatility in the markets. So here we are, bearish collapse, wave 3, bad idea to acquire position at the end of wave 3. Clear? Enjoy inception of wave 3, stay out wave 4, and this is the power. Never ever get tempted to acquire a position at that level. Not a good habit to take. Few more examples and I look forward to answering your questions. Euro, beautiful rally. 4 rules spelled out at the inception of the trend that price will stage extremely powerful rally. And if you know the rules, that's all you have to do. Obey 4 rules and enjoy the rally. It is that simple. Exact same rule played out on oil, except oil is drastically low liquidity instrument that capable of very funky moves. That's precisely, I encourage new students not to touch oil, because with very low change in contracts, oil can go from comatose to extremely sharp volatility. Lately in our trading room, our average trade on oil had been over an hour. Most trades lasted hour and a half, 2 hours, which is unheard of. as typical trade on oil had been 20 seconds to 2 minutes prior. But this is precisely the reason. This is oil monthly chart. Let's recap what played out. All the levels on monthly chart drawn since 2010. This was reversal zone where oil collapsed from. Marvelous volatility respected the end of the minor trend, where serious buying pressure picked up the steam, finding sellers at reversal zone 1, reminding you, obey the rules. Do not ever get tempted to acquire a position at the end of wave 3 at reversal zone. Not a good idea. Sellers stepped in and once again respected the end of the minor trend, dancing in minor trend structure entire 2012, finding sellers in 2013, and this is what I expect on oil. This is where we're gonna get tons of selling pressure as monthly rally is taking major pause. And that's precisely the reason why the last 6 months it's been the lowest historical volatility on oil. And once the sellers will step in, buckle up. Volatility will be quite powerful because we know that short trend is always drastically more powerful than long. Buyers are getting pretty tired, pretty choppy, and expect to see the same. Selling pressure is not far off. And that's exact same sequence as you witnessed on trade example I highlighted on range charts that we've taken yesterday. Google 1 minute classic clean and marvelous, and yes, I look forward to answering your questions about stock as I see a couple of questions. I do not trade stocks currently, so I have a data feed only to major stocks. So as long as it's a major stock, I look forward to answering your questions. So this is what we teach in the course, pure price for entry and Fibonacci for exit. No software, no indicators, any instrument, any time frame. Currently in the course we have a couple of forex traders, options traders and stock traders. In group sessions, everything we teach only on S&P and oil. In private mentoring, we work with your instrument and your time frame. That's it. So that's all there is, guys. I will browse you through the website and I look forward to answering your questions. And speaking of the devil, what is summer special? Summer special is Alpha Wave Trader Bootcamp, which means if you sign up for education course in June or July, you can trade with graduates. In August, I will be introducing brand new strategy, which is very powerful, and it's based on time, which means if markets are in corrections, it will require a whole lot less babysitting. You will get a lot more warning on the price. So this would be daily education, daily trading without any interference from the rest of the world. So if you ever would like to contact me, please click on contact button. You can see my phone number. I love hearing from you. Send me an email. And this is pretty much it in a nutshell. If you would like to learn about Alpha Wave Trader method and how I developed it, you can click on my story or read about Alpha Wave Trader method. Look forward to your questions, guys. Look forward to analyzing the instruments. Let me take on look on the first question. The first question was Dow 10 minutes. So I would appreciate if we start with futures and we'll migrate into Forex and stocks. So any other questions on futures, please do ask as I'm pulling up the instrument manager. So here it is. I'm pulling up Dow on futures. YM. YM is a beautiful instrument to learn on by far. For day trading, $5 per tick takes the lowest amount of risk. Any other questions on futures? Please do post. I see the questions on the stocks. So let's take a look on YM. IBM, is IBM a major stock? NQ, Matthias, what time frame is NQ? I need the time frame next to the instrument. Is this weekly or is this 1 minute chart? GC 5 minutes. I have gold open. I already highlighted it. I will recap that again. Gold 5 minute and Q 5 minute. Any other questions on futures? Any other questions on futures? Corn. Excellent question. Going to corn. If you know the abbreviation on Ninja Trader, I do appreciate it. Again, I need a time frame next to it. Corn coming up. Future corn. I think it's ZZ on Ninja. It's been a while since I looked on corn. Cotton. Hold on. Corn. Here we go. Corn futures ZC done. Anything else? ES. We looked on ES multiple time frames. So I see that, guys, you're not posting the time frames. So we're gonna go with the time frame that I have on the charts. So let's start, and I will pull up as well as the question on the stock. I see the question on IBM. Yes, Paul, I see S&P Emini. There are multiple Eminis in the markets, not just S&P. I'm surprised that quite a few people do not know that. Emini? Which Emini? Are you referring to S&P? IBM? Any other questions on the stocks or Forex? So we can go straight to questions, please. I obey the rules I developed. Apple Daily, marvelous. Apple Daily. Coming up, done. Love Apple. IBM. Is IBM one of the major stocks? Then I should have IBM. Okay, so IBM. I don't believe I see IBM anywhere. So let's go to the next question. Aussie 1 hour is excellent question. Aussie 1 hour. I have Aussie ready. Yes, S&P Emini, we have that ready. Fantastic. Okay, guys, let's rock and roll. Plenty of questions. Let's answer all the questions that you posted. Here it is. So I'm gonna go through what I have under my tool manager. So the question on Aussie was Aussie daily. So let me plot the levels, and I will highlight to you what I see based on the Aussie daily. On Ninja Trader, I use 1440-minute chart. It gives me precise levels. It is extremely late to acquire long position on Aussie daily. You had a beautiful buying opportunity on Aussie at 93.40 level. So this is where Aussie daily is currently. This is where it staged bearish correction from. This is not the place you want to buy Aussie daily. It's absolutely essential and critical to wait for a pullback. Beautiful long last opportunity on Aussie daily was here. This is way too late. Is everybody seeing chart? Please confirm, guys. Is everybody else seeing chart? I'm projecting currently Aussie daily. Okay, fantastic. Is everybody clear? Aussie daily already reached decision point 2, second target prior. From a beautiful rally giving you second re-entry. This is way too late. Next level after the pullback will be here. You do not want to acquire a position into this level. You remember what happened on S&P regarding questions on S&P Emini. This is S&P Emini on Ninja. This is where S&P collapsed from. Same formula. S&P Emini 1 hour, oil daily. Know the levels. That's what I use. That's what identifies 24 hours, Marilyn. 24 multiplied by 60 will give you precise levels. Okay, next question is Apple. Apple daily coming up. The split on Apple daily was quite fascinating, isn't it? It was absolutely insane when you look on the chart. So this is a chart, and this is what chart projecting. The split, you don't see this very often. This is quite historical. But let me show you where collapse came from. This is a reminder why you do not want to acquire a position at reversal zone. And I will gladly go back on Apple to show you what played out in 2013 before Thanksgiving. This is reversal zone on Apple. If you knew Fibonacci levels since 6 months ago, you would know not to acquire a position here. And this is where Apple struggled on daily immensely. And this is where collapse came from, spelled out by the price 6 months ago. Make sense? Price does not care about any splits or anything. Everything is preset in the price, far in advance, just like symmetry you witness in everything that surrounds you. And if you obey for rules, you know how to apply these levels. And those are the rules I spelled out throughout the webinar. And that's what we teach and recap continuously. Next question was on NQ. The time frame on Nasdaq was 10 minutes, I believe, correct? No, there was no time frame posted on NQ. Let's take a look on NQ. 5 minutes, as all the other questions were gold. 5 minutes, correct? And I just recognized I have to change a contract. Hold on. As NQ needs August contract. No, it's September. Let's see what NQ had done and where the price is dancing at the market close. Shall we? First of all, I want to show you what happens if you ignore reversal zone. This is where reversal had been played out, correct? At FOMC release. This is where price did the fascinating dance. The same sequence you witnessed on S&P 1 hour. Decision point 2, back up, the end of the minor trend, worthless corrective dance, reminding you, if you are serious about trading indices, you do not want to trade on FOMC day. You want to come to the charts 15 minutes before FOMC release and prepare to trade after FOMC release. And this is a danger of acquiring position at reversal zone. This is where you monitor for long trade entry. You do not acquire position into reversal zone. This is bearish trend exhaustion. And if you let the price settle down and obey 4 rules, you acquire trend position. This was beautiful point of re-entry after the very powerful and very volatile move. And pay attention to how much price respected reversal zone upon retracement. And let's take a look and let's see where Nasdaq is to the upside on 5-minute chart. Shall we? This is where NQ is currently. This is where NQ respected the end of the minor trend for 20 minutes, crawled up at the market close to decision point 2. And that's the precision of Fibonacci levels. And that's what matters. And if you don't know where these levels are, if you don't know where to take profits off the table, ouch. You do not acquire position into these levels. 50% of the time price reverses at the end of the minor trend. This is extremely important level. Next question, gold 5 minutes. Coming up. I already looked on gold 5 minutes. Remember, we already addressed the reversal zone, correct? What played out on gold at FOMC release? You remember that, correct? This was extremely volatile move, reminding you the danger of acquiring position at these levels. And let's take a look where gold 5 minutes is currently. How predictable can the price be? Struggling against the brick wall. Know what not to enter into. And that's why I love trading, because I witness this magic sequence on every single trade we take. And that's the power of the price, and that's the power of Fibonacci. So let me see what other questions there were. I believe. What is my prediction on gold 5 minute? Currently, you're in gold bearish correction. Your bias is definitely bearish. You had beautiful bearish trade here. This is correction. Right now, the smartest thing you can do is stay out. 5 minute right now is not tradable. You have 50% buyers and 50% sellers. Paul, if you listen throughout the webinar, I developed my method. It's indicator free. We have students on MT4, Sierra Charts, TradeStation. Fibonacci tool is free, and so is price on any platform. You just have to obey the rules to use the tool. If you're looking long term, what do I see on gold? Let's take a look. 5 minute in bearish correction, clearly. Everybody's seeing that, correct? Let's take a look. Let's see what hourly chart is telling us. Hourly chart is telling us that bullish trend is way overextended. The beautiful buying opportunity on gold was yesterday 1262, 1268. This is pretty late. I expect huge selling pressure on gold. This is gold hourly. Gold may do a bit of a crawl to decision point 2 and expect very strong selling pressure at this level. Did I miss any of the instruments posted earlier? I see USD JPY daily. There is no other questions on stock, no major stocks, correct? This is the method I developed, Ken. This is what the webinar had been all about. You apply 4 rules and plot Fibonacci tool. All of the levels on your chart are Fibonacci levels that identify profit-taking levels and levels of support and resistance in the market structure. We already went over Dow. Oh, we didn't. I'm so sorry. Dow 10-minute question was very first. Let's go to Dow. Let's go to Dow. My apology, because at the bottom of the list. And corn. There was a question on corn. Okay, Dow 10 minutes and corn. All right. Dow 10 minutes also in the middle of bearish correction. So this is where Dow is currently. Dow came to the end of the minor trend. So if you had acquired a long position on Dow, this is where price is struggling against. Again, this is the most important level in the market structure. This is the end of the minor trend. There is a link Jean posted in the room where the copy of the webinar will be recorded. So currently you want to stay out of Dow 10 minutes. This powerful bearish correction may pick up this steam further to the downside, but this is a reminder. This is a Fibonacci level that identifies the end of the minor trend. Most important level in the market structure. As we always have minor trend, we not always have major. The only way you want to monitor for long is drastically lower levels. But there is nothing possible unless rules are met. There is no random speculative points of entry. This is completely meaningless. What's happening currently? The rally was very powerful, with multiple long opportunities from 16,730, 16,750, 16,770. This is very important to stay out of and monitor for the power of this bearish retracement. Another question was on corn, and please correct me, was it corn 10 minutes? Corn was the last question. Yeah, Paul, everything is done manually, as I spelled out. Again, if you come and read about Alpha Wave Trader method, it requires your knowledge and your skills and 4 rules that we teach in the course. Most of our students grasp everything within a couple of weeks. We just opened up a boot camp as of today, and it's already half full for the month of August, just to give you a heads up. The summer special boot camp is half full, and it just opened up today after market close. So anyhow, there, corn 10 minutes. Let's see where corn is. Let's take a look. Ouch, corn today at the market close. And this is a dance between the levels yesterday. And this is a reminder, know where reversal zone is, know what not to enter into. What is the price currently telling you? Bearish corrections. Reversal zone struggling to break decision point 1. The bearish trend will end its bearish correction here. Then selling pressure will pick up this steam. But this is a reminder. Buyers picked up this steam not far off from decision point 1, found sellers once again, and selling continued with worthless bearish corrections. And this requires your knowledge and understanding of the price. And if you obey 4 rules, you know how to plot Fibonacci on any platform. And that's the questions for today. Last question, 6E. What time frame, Marilyn? I can't refuse to a girl. What time frame, Marilyn, please? 6E? 15. 6C coming up. Michael, Jean posted this multiple times. I will do my best to pull it up as well. Can you see the links that Jean keeps posting? Here it is. Thank you, Jean. So here is a recap and very wild formations on Euro 15-minute chart. Here is Euro 15-minute chart and the importance of not acquiring position at reversal zone. So if you think you're taking spectacular trend and you're acquiring position anywhere near these levels, it becomes very, very dangerous. And if you know where these levels are, you know not to acquire trend position and you know to monitor for reversals. And if 4 rules are obeyed, you simply take a reversal. And this is FOMC, reminding you once again the importance of not acquiring positions at these levels. And every time sellers picked up this theme. So thank you traders so much for your time. Hope you enjoyed the power of Fibonacci. I'm truly fascinated by the price. I consistently work on developing new strategies as I find it the best puzzle of all. And it is absolutely beautiful only if you play by the rules. I've never been to Phoenix. Thank you, Diana. Thank you so much. If you ever would like to contact me, send me an email and I look forward to seeing you in the trading room. But pretty please remember, the invitation is for next week because I do not trade on Friday. On Friday I teach Fibonacci class. So it's the best if you just come in next week. Marilyn, that's exactly what we teach in our education course, those 4 rules that I spelled out throughout the webinar. So thank you everybody. Thank you traders, thank you ladies, thank you Jean, and thank you Bennett. It's always my pleasure being here with you. Thank you so much. Look forward to seeing you in the trading room on Monday. Thank you, Erica.
Well, thank you, Alla. That was just a terrific webinar. And I'd love to have you come back. Would you do that?
Absolutely. Thank you, Jean. Means the world. Thank you so much.
Terrific. And I think you've got some great links up there where everyone can kind of try out your trading room and see what they think. I've got actually 2 clients, I think, that have called me and told me how much they love going to your trading room, and your voice, they say, calms them down. So
thank you.
That's a good thing. But anyway, thank you everyone for joining us. I know I posted the link for the recording. I think I'll post it just one more time. It'll be available tomorrow. You can access it by just saving that the link and accessing that tomorrow. It'll be posted in our archive section. And again, Wednesday Night Live is every single Wednesday, same channel, same time, same station. Next week we've got Tom Alexander, and he'll be giving us some great information next week. Again, I thank you all for joining us, and I'm going to leave the webinar room open for a bit so you can access these links and chat if you like with Alla and ask her any more questions you might have. Have a great night, and we'll see you next week.